Hi, I'm Jack Crooks from Money and Markets TV. I hear a lot of complaints about the US dollar as a world reserve currency. But the question is, would any of the alternatives be better? Overall, I believe that this currency system has served the world pretty well, and we need to be careful not to throw the baby out with the bathwater. Today I want to examine the last two monetary regimes, the gold standard and the Bretton Woods fixed rate system, and compare them to our current floating rate standard or fiat money standard. If you understand how these systems evolved, you can better evaluate their strengths and weaknesses, and I think develop a more informed opinion of our current system. The original gold standard was an effort by participating countries to fix the prices of their domestic currencies in terms of a specific amount of gold. This price stability was the hallmark of the gold standard era, and it made the system superior to fiat currency monetary regimes. No, it wasn't perfect. There's a finite amount of gold in the world, which led to supply problems. The gold standard era also saw deflation and financial panics. But overall, the system ushered in a degree of monetary cooperation, stability, and rapid real global growth that the world has never seen before or since. However, it would be extremely difficult to return to the gold standard today. That's partially due to the relative scarcity of the precious metal, but primarily it's because currency stability has now taken a backseat to other objectives, such as maintaining full employment and all sorts of government spending for political purposes. A gold standard forces discipline on governments. It applies natural market constraints. And as much as I'd personally like to see a return to the gold standard, we live in a different world now, and it seems a distant dream. Beginning in 1944, the world made an attempt at another gold standard, a gold exchange standard to be precise. The dollar was at the center of the new Bretton Woods system, and it could be exchanged for gold. But the system had three major flaws that ultimately led to its failure. First and foremost was the fact that dollar-based credit flooded into the global economy, so the U.S. lost its ability to keep price levels stable through higher interest rates and lower wage rates. Second, countries consistently fiddled with the original dollar parities to gain an advantage on trade. And third, the free flow of capital across national borders prevented the capital controls that the pegged system required from being sustained. Ultimately, these problems led to inflation because there was not credit contraction mechanisms. Foreign claims on gold overwhelmed the gold stock. So President Nixon made a decision in 1971 to end convertibility and usher in the floating rate era. In this type of system, major currencies float against one another. The market prices are based primarily on supply and demand. Historically, it has no precedent. And you might argue that it's nonsensical to have a fiat currency that's backed by nothing other than the promise of politicians. But after the breakdown of Bretton Woods, that's the system we're stuck with, and it's actually served us surprisingly well. Ultimately, the dollar's position as a world reserve currency in this system rests on the faith of those who hold it. So given the recent financial crisis and credit crunch, combined with irresponsible spending, debt creation, and Federal Reserve policies that seem to favor a weaker dollar, many people are concerned, and I think they have a point. However, the dollar's position as a reserve currency is also supported by the fact that there is no real viable alternative. And I still believe that the United States can restore some credibility to the system. But restoring faith in the dollar will take discipline from the government and the monetary authorities. For Money and Markets TV, I'm Jack Crooks. Thanks for watching.